And welcome back to my 7-part series of 7 reasons why you've been denied for a business loan, part 5. Again, Stevie G here, podcaster of the Get Money Podcast. Just search me on iTunes under Get Money Podcast with Stevie G. And also, I'm CEO of Next Venture Financing, where we provide lending without limits. Just apply at nextventurefinancing.com. Now, next, we're going to be going into average revenue. Now, this is Mark Cuban. You've probably seen him before. You've probably seen the show Shark Tank. And what happens on that show is that somebody comes there in front of a board of investors and he presents his business. Now, usually the sharks ask him, what were your revenues in the last 5 years? Now, the guy then will say, I made $5 million. Then they'll ask him, how much did you make last year? And then he'll say, I made $5 billion. Then they'll ask, how much are you projected to make this year? Then he'll say, well, we've had some problems this year. It looks like I'm only going to make $500,000. Then the sharks back up and they say, forget this, we are out. Now, why is this? Well, because they don't want to see declining revenue. They want to see that a business is growing. So when lenders see your revenue is declining, it's a sign of trouble in most lenders' eyes. And so they will back out from giving you money. So that's why talking about average revenue is so important. So having good, stable revenue can be one of the main reasons you get approved for some funding products such as merchant or revenue advances. Just having consistent revenue alone can actually get you approved. Just for those advances, that's it. Just consistent revenue. But almost all lenders do require that you have revenues coming in for approval. So credit cards and some collateral-based financing, they don't really care about revenue. Well, a lot of the other ones do. They want to actually see that you have average revenue coming in to be able to qualify. Now, some sources such as personal and business cards won't require this. Other sources such as advanced lenders will verify your cash flow with your bank statement. They don't need to have your tax returns when it means talking about alternative lending, but they will require that you provide bank statements to verify cash flow. Now, most lenders issuing loans and credit lines will require tax returns on top of profit and loss statements and bank statements to verify the income. Your tax returns again have to show good net profits. The amount you will show will determine the amount of money you're approved in a lot of cases. So a lot of times when you get a loan, the amount of money you get is equivalent to your net profit. So just keep that in mind. Lastly, you must show increasing profits from year to year. Well, guys, this ends our part 5 of our series. Always remember, you can contact me for any questions and visit nextventurefinancing.com to apply to thousands of lenders. Also, if you want to learn new strategies for your business, go to iTunes and search for Get Money Podcast with Stevie G. Thanks again for listening. Talk to you soon.